Let's dive into Bitcoin today and, of course, some of the banks that might be continuing or beginning to hold Bitcoin and start a new trend. We'll dive in deep. My name is Paul Barrow. Welcome back into Tech Path. Of course, we're doing our live stream today. And, of course, on live streams, we always love to get your input. So make sure and drop some questions in over in the comments on the side. We'll try to get to those as we can. Before we get started, I want to thank our sponsor, and that is Tangem. Self-custody is the way of crypto. If you're brand new to crypto and you want to start to explore self-custody, this is one solution that you guys can check out. Tangem is a card that works as a hardware wallet, and it's pretty simple. It works in unison with an app. The app is very, very easy to use, also super sexy and easy to set up. The cool thing about Tangem is tremendous security levels. If you look at just that alone, I think it outpaces most of the self-custody wallets that are out there. So check it out. I think you guys might like it, and it's not that expensive. So just hit the Get Tangem right there at the top right. You'll get into the 3-card set. Use that and our link, and it'll make it even less expensive for you. So check it out. Let's go over to a couple of tweets here. Here's Tom Crown talking about Bitcoin's morning, question mark, and that, of course, seeing some pretty significant downward trends on the market today. But this is a typical move that we see all the time in crypto. These are the kind of scenarios that do play out, especially on some of the premium assets, with Bitcoin being the leader there. I want to also get into a point right here. Bitcoin and altcoins have been experiencing a sharp decline in recent hours. Here's some of the details. Mainly, everybody's looking at this situation right here, that there's just a little bit of leverage clearing. Okay, maybe that's the case. Could it be something that extends into a more negative trend this weekend? That's the thing I'm watching right now, is looking at sentiment data from our MSI, which is our market sentiment index. We were seeing downtrends, so I'm anticipating Bitcoin to continue a little bit of a decline over the weekend. We'll see. $62 million long positions were liquidated in the last hour, around $149 million in liquidated in the last 24. Majority of them consist of long positions. So that's kind of, typical, as I said, of Bitcoin. Here's Peter Schiff. He talks a little bit about this in terms of the appetite for Bitcoin in general. When Bitcoin ETFs launched 4 months ago, there were no sellers, only buyers. But now there's a lot of investors that have made their way into ETFs, so the supply of potential sellers is large. But with waning demand from new buyers, ETF outflows will soon put significant downward pressure on Bitcoin. I don't know that we will see significant downward pressure. And I think the key here that we've looked at for quite some time is, yes, I think the ETFs have had an impact on Bitcoin, but is it the impact that has driven Bitcoin back to its all-time high? I don't know. I'm still questioning whether or not that is the case. Sure, it is a factor that plays into this. There's a lot of dissenting, opinions on this. This is just kind of showing some of the inflow support right now. Net flows overall, as you can kind of see, a little bit down, but on the week overall up. That in itself is still bullish in terms of a sign. And if you look at back on year to date for Bitcoin, or even the last 6 months or the last 12 months, whole different story. Bitcoin's still considerably bullish going forward. Other things that you have to look at, and this is Peter Brandt kind of reinforcing that thought. There's nothing, I repeat, nothing bearish about this chart. You might think stocks are headed for a crash, but the burden of proof is on the bears, not the bulls. So right there is a good example of that chart over the last couple of years. So as you can see, back to 2017, not a bearish chart at all. So definitely nothing I believe that is going to be concerning. Obviously, there are macro factors that will play into this. We could get into all sorts of things around jobs, inflation. Likelihood next week we'll probably see an inflation print that will be a little bit down. And if that is the case, get ready for a pump. That is a good indicator of the Fed continuing, because remember, you had job numbers that are much softer than anticipated. If we do get that softening of a inflation number, all it's going to take, I think, is one more negative print on inflation to get a trigger pulled. And that, of course, will mean rates reduction. So a lot of that could spell into some pretty interesting areas. The other thing you'd have to look at is the M2 money supply. And this is something that has been talked about in the markets for a while, and that is this trend of the money supply. I'll zoom in on that right there. As you can see from around January of 23, we started to see money supply. This was really the beginning of that, I think the depth of that bear market. And then all through 23, and here we are in the beginning of 24, and we've got a little bit of a light at the tunnel. First time we've seen positive movement on M2. What does that mean? Many people would say this is the beginning of the altcoin season. Many people would say this is the real bull run. But at the same time, there's other factors at play here. M2 is a big part of it. And it goes into a little bit deeper on this. This is a clip from Arthur Hayes kind of talking about trying to put the pieces together. Listen to it.
The problem with M2 is that it doesn't capture all the things that are used as credit money in the economy. And the problem with M2 is that it doesn't capture all the things that are used as credit money in the economy. And every time there's a new problem, the elites in charge come up with a new way to confuse people about how they're going to print money. So maybe it's M2, maybe it's broad banking reserves, maybe it's the reserves held at the central bank. It depends on every single economy and how they want to print money. But at the end of the day, the goal is, how do I stuff more credit money through the economy without getting a negative reaction from the populace being like, oh, what's all this inflation? I'm going to blame the people in charge. So yes, M2 is a good measure. And sometimes it works, and then sometimes it's flat. But it's been flat, for a while. But you still see gold and crypto doing very well. You still see major tech indices at all the new time highs. So there is an ample liquidity. It's increasing. It just might be in the indices that people are familiar with from how it operated in the past.
All right. So I'm in agreement to a certain extent there with Arthur Hayes that there are other instruments at work here. And again, this is how I think traditional finance markets do work. And he is exactly right in the sense that right now it's almost like a controlled fall. And if you look at this, because many people would say, are we going to get a hard landing, those kind of things? Are we still heading for a potential recession? Are we maybe going now into a stagflation zone? These are things that are all negative for the Fed. And they're also negative, I think, for the political landscape, which I'll cut to in a second, because that's another big factor in this next 6 months. Very, very critical time for risk assets. So you need to be paying attention. If you're not watching this show, hopefully if you have time every day, a lot of what we're looking at is this narrative that's going forward. And a lot of this will be leading into what I think will be the real bull run of most of these assets. Here's 86% of Bitcoin supply still in profit. So that's a very positive nature overall. So you don't necessarily look at this. If 86% of the people are still in profit, why would they sell in a market like this? Do they truly believe that Bitcoin has hit its top? No, most likely that is not the case. And I think right now, as we're still in a macro pressured environment, everybody knows that eventually this will spin. Now, yes, the S&P could see a major drop. Yes, that would hurt the markets, especially risk assets, for a short period of time, but I think it will also open up an opportunity in a big way. It's like what we say all the time is when you do see market corrections like that, there's usually huge opportunity. A couple of points right here that they talk about. Bitcoin pushed toward a new all-time high in March. Significant milestone was reached in February. 99% of the Bitcoin supply in profit. That was a huge one. And this was the first time since November of 21 that over 99% of the supply was in profit. That's pretty significant, really, when you look at what Bitcoin has been able to do in the last 2 years, because that means most everybody that has either come into Bitcoin or is in Bitcoin, in essence, all of the paper hands have been flushed out. Now we're back into HODL zone of people and investors, whether you're in the ETFs or not, but they're holding Bitcoin. I think that will be the thing that kind of starts to hold things, very solid over the next year or so. Crypto firms, though, are bracing for intensified SEC and CFTC action. Of course, there's many factors that play into this. Some of it we're probably going to see in the next 6 to 18 months, 6 to 24, of another cycle of enforcement because of the cycle of asset appreciation and interest by retail investors. So you got retail investors coming in, obviously for ETFs, but also around the globe, you have all these ETFs basically getting improved. You have stable coins coming online in Europe. A lot of appetite is starting to develop, and I think that's the pressure and that's also why we've seen so much action in DC. If you haven't watched some of our videos in the last few days, we've been doing hearing after hearing, ruling after ruling. A lot is brewing right now in DC, but there's no legal framework presently in place to regulate these service providers. So this is a big deal. The CFTC chair expects watchdogs. Obviously, we're going to crack down. We've already seen Wells notices, obviously with Coinbase, now with Robinhood. So all heading in that direction. The SEC also tripled the number of administrative proceedings in 22 to initiated 46 to enforcement actions in 23. Regulator imposed another 281 million in fines. We'll see what the fines are going to be with 24 at the end of this year. Most likely it's going to be more, depending on what happens with Ripple case going forward. Make sure and drop some questions in over on the side, and I'll try to get to as many of those as I can. And of course, complete the poll right there. We always love to get that. The SEC does not want Ethereum to transform the banking landscape. This is coming in from Joseph Lumen over at Consensus. One of the things that he's talking about here that I think is interesting, the SEC appears to have reclassified Ether as security without telling anybody that that's the case. They're going about a strategic series of enforcement actions rather than open discourse. And that's a problem. It's also a signal. It's a signal that there's something else brewing. And I would agree with Joe on this. We believe there's a flurry of activity designed to enable them to say that their action wasn't capricious in a very likely event that they deny the ETH spot ETFs. So we'll see how that plays out. I think they're going to be concerned. So much attention of capital will flow to our ecosystem, considering it's an improving enormously in terms of scalability and usability. I don't know. I'm still questioning whether or not we will see a massive inflow of ETH, because remember, you have to think about the type of investor that goes into ETH. Would they go into an ETF? I was surprised that the ETH ETF in Hong Kong did not do as well as it did. In fact, it was like 15% of the inflows versus 85% of what Bitcoin's inflows were. So I don't know. It's still, would it be different here in the United States? Let me know in the comments if you think it would be. SEC claims that Coinbase MetaMask wallets are acting as broker-dealers, are setting a dangerous precedent. This is crazy. He added that the thought of a piece of software acting as a broker-dealer was a preposterous notion. This is being argued a lot on Capitol Hill right now, and there is a lot of frenzy, I think, going in right now because of the implication on the overall financial market. At the same time that we're seeing major movement in the BRICS nations, which reminds me, there's a big summit coming up for BRICS. Guess where it is? It's in Russia. Most likely we'll see a lot of alliance into how are they de-dollarizing further. So I think it happens it's next week, I think. If that starts to reveal even more potential de-dollarization, then you're going to see more financial firms starting to move in directions of other assets, alternative assets out there. Bank of America is one of those. Wells Fargo also offering spot Bitcoin ETFs to clients, and this, of course, coming in off Bloomberg. This was in February. Remember this, guys? This was February 24. And with that being the case of interest being shown here, I think the point is that now we're starting to see where these little dominoes are starting to fall and kind of connect the dots overall of what these interested parties are. So Wells Fargo now holding a little bit of Bitcoin in spot ETF investments. Now, granted, you're going to say, hey, Paul, it's nothing, compared to what someone could hold. You're right, it is. It's a very small amount, but the point is that they are doing it. So have they continued to show their hand here, meaning Wells Fargo, and that this is just the beginning of their strategy around digital assets as a whole? Obviously, ETF investments, a big part of this. So Wells Fargo, third largest by asset size, disclosed investment in Bitcoin exchange traded funds. Latest in the securities filing, Wells Fargo's investment, not that much. The filing also disclosed Wells Fargo's exposure in Bitcoin Depot, which is an ATM company. And then the bank also holds 52 shares of Bitcoin Depot, not that much. The point is this, why even hold these? Why even hold these if you're not interested at all? What is it? Is there something, is this a staffer or someone that's, just out there playing with, a certain portfolio? Or is this something much more deeper in terms of strategy development? Because this is usually, and I think a lot of people have done this before, once you start to do something or engage, what's the first thing you do? You start one of those transactions, usually a test transaction, or doing something just to get the wallet or get a ledger entry to get that going. So we've done a lot on Wells Fargo before. So I always have to wonder, is there something else being connected here? And let's just go back to our YouTube channel. And I want you to go right there. There's Wells Fargo, Elizabeth Warren, crypto ban, banks versus DeFi. This was from Wells Fargo. Quite a bit of Wells Fargo topics. Is there something brewing there from the crypto army that many people have kind of assumed is that maybe they're just trying to do a stall tactic here to allow for some of these companies, some of these investment firms, some of these banks to position into the markets? It's always been a question for a lot of people. Here's Wisdom Tree's crypto business now going live in New York against big shareholder wishes. This is the other thing that you have, and that is the fact that you've got a certain set of investors that continue to argue this point of risk assets. Most of those, I will say, are boomers. It's not that that's just the demographic, but it's someone that is just looking at investment in a different way. And when you look at that and you compare that to this tweet right here, I think everybody would remember, Vanguard CEO says customers should not put Bitcoin in their portfolio because of no cash flow, obviously no intrinsic value, don't worry about it. That was January of this year. You guys remember that? Right there's the guy. Well, this is what happened. Just in, Buckley to step down as CEO, $7.2 trillion asset manager. Last month, Vanguard banned Bitcoin. So as you can see, this was pre what we saw coming out of the BlackRock performance of one of the top ETFs ever. Vanguard missed that. Their lead CEO got to take a nice vacation and hit the beach, as they say. This clip right here will go a little bit deeper into where we're going with this, because this starts to connect some of the markets, because real estate is also a play into this. This also ties into potential regional banks. All of this plays into the bigger market opportunity that is at risk here. So take a look at this clip.
And he's working with a very different economy, where since he started raising rates in May of 22, the healthcare, government education industries have added 3 million jobs. So he's not impacting that at all, and that's almost 50 million of 160 million jobs. So he's got a hard task with a blunt tool, and the consequences are the real estate markets are taking it on the chin because rates rose so fast. We could have handled this, but we couldn't handle it this fast. And people are looking for these cracks, and you're going to see the cracks develop now. You're going to see a regional bank fail every day, and not every week, maybe 2 a week.
Maybe two a week.
Maybe 2 a week.
Are there too many banks in America?
I mean, yes, but they're also who makes the loan on the dry cleaner, who makes the loan on the McDonald's, who helps that small guy open a store. So these are community banks. They're important to our fabric.
So you can see there is a risk here with really these lagging indicators that we've talked about for quite some time. Real estate is definitely one of those that will continue to take a little bit of heat. And with that, you have to also look at small business. Here's Kobayashi talking about that. Focus is always S&P 500 companies, but however, S&P 500 only account for 18% of total U.S. employment. That's the other factor that plays into this. If we start losing regional banks at a pace that he's insinuating, that would have, a detrimental effect on local business. And that, of course, represents right there, almost 80% of the jobs. Put differently, more than 80% of total employment in the U.S. economy is outside the S&P 500. In fact, small business account for roughly 44% of U.S. GDP, another major hit that would be, devastating for the United States. Europe, 96% of companies with 100 million and more in annual revenue are private. So you can see this plays. Same thing here. U.S., it's 96% of companies, 100 million more in annual revenue are also private. So small business, this could be impacted much greater, and this may be the sleeping giant that is not being looked at by the Fed, because the Fed, I'm sure they understand where the job flow could come from, but when you see these lagging effects, because that's really what it is, all these lagging effects of these high interest rates that have been just resident for the last 18 months, and I think that's the factor that we're going to see playing out. We've got another clip here that goes into elections and how important this is going to be, because as I said earlier, this is a big deal. Listen in.
American elections are going to be a net positive for the crypto market.
regardless of who wins. Whoever wins, they're campaigning on, I'm going to give you something that you don't have to pay for. And I'm going to pay for it by borrowing more money. I'm going to pay for it by using the central bank to print money. And that's really what the fight is about. The bull market is still going to continue. Obviously, we've slowed down a bit, and now we're entering the summer, the northern hemispheric summer, where things slow down, volatility declines, and we're going to get a choppy range-bound market. But for those people who have fiat and extra cash that want to allocate to crypto, this is the perfect opportunity to do so.
So he's getting into a couple of points here because he is right. I think, we're going to see some movement on whichever party wins. I'm still very worried that, obviously with the Biden administration, I think their position is pretty strong, which is anti-crypto. But more importantly, I think they're anti-business, which is the bigger concern I have in terms of innovation. So if you are interested, which you should be, if you're watching this video, you guys should be getting out there and really voting your interest. And you can do that just by going over to this Twitter account right here, which is Stand with Crypto. And it gets into a little bit more about, this is done by Coinbase, and they kind of break down all the different candidates and their positions. So, been a long red-eye flight, guys. So, anyway, let's go back to another clip here. Arthur Hayes is going to get into a point here that I think a lot of people ask, and that is, when is the top? What is the top? How do you identify it? Well, listen to this one.
We just passed 70,000. Now we're bound at, 63 or 64,000 Bitcoin, and people are questioning whether that was the end of the bull market. And we just started. This run, it really just started in November of 2023. Well, I would say that probably means that we're not even close, because we have people inside of the ecosystem are still doubting it. When you hear everyone saying we have fundamentally changed the cycle of Bitcoin could never go down. When I start hearing more and more of that from people who were doubting it at this point in time of the cycle, then I'll start to get a bit more worried that our expectations of what money printing can do for Bitcoin are getting ahead of what will actually happen. But I don't think we're there yet.
So in some of your previous interviews, you said that you were...
All right, so you can kind of see we're not quite there just yet, and I think this is the market that we're looking at right now. Bitcoin, of course, sliding off that little bit of week high, which is around 63K. A lot of people asking about Solana sliding off that high right there around 152, back into the 148 range. I think we're going to see these kind of this is not major volatility in the market overall. Let's go over to the poll real quick and take a look. Here we go. Would you hold your Bitcoin in Wells Fargo? Hell no, self-custody. Well, at least we know where our audience stands. And I would have to agree with that one. Self-custody would be my route. Let's get into questions here. If Trump wins, hopefully we won't go back on his word like in crypto. I think Trump, anytime that it involves innovation and business, it is difficult for an entrepreneur to not be for that. So that would almost be against the very brand of what he represents. So I would say it's going to stay. What do you think of the bottom for Bitcoin this quarter? Do we see the 60K again? Yeah, I think we'll probably get another dip over these months. And of course, it will depend on a couple of things. So watch for these CPI numbers, and also the jobs report next month, I think, is another factor, because going into summer, that's usually when jobs will start to adjust upward, because there's so many part-time jobs that are available. People don't comprehend how willfully ignorant most people are about crypto. I totally agree with that, man. The more I talk to people that I would think should know, they don't know. So we are still, very early in the adoption and mainstreaming of a risk asset like crypto. It's kind of like, in the early areas of social, it was the same thing. A lot of people didn't understand how to use social media in the beginning. They didn't really understand what it was for. What would it benefit them? Now, I think that's kind of the cycle we're dealing with now. I would trust my bank. I still need cash once in a while, of course, but it will depend. If USDC or a stablecoin get, represented, and we start seeing that show up in retail transactions, wouldn't you just use USDC because of maybe a lower cost, speed of access, the ability to deploy that kind of capital into risk market? I think that's what I would do. Corey comes in and says, what's up with the drop in Solana? Not a lot. Right here, Solana, of course, as I said, not coming off too much right now. I'm still, a big Solana bull. I think these institutions are revealing They hold Bitcoin ETFs is misleading. All of them hold gold, GBTC, and probably the ones that have been dumping for months. Maybe, could be, Black Swan Dawn coming in there. Let us know more if you guys are catching this after the live stream. You just missed it. But don't worry, you can, of course, comment down below. But it's great to have you in here on the show. And the way you do that is subscribe to the channel, hit that little bell, and it's going to give you a notification when we go live. And that way you can interact in the audience. Hopefully we'll ask some questions or answer some questions for you and get rolling on that. We are going to be covering this quite a bit over the next week. There's a lot of news coming out next week, so get ready. We're going to see some very interesting things. If you're not following us right now on X, it's just @Paul Barron. I'll catch you next time right here on TechPath.